Good morning, this is Larry McMillan with a stock market update on Monday, July 24th. We're sort of in the summer doldrums here as far as the market goes, but August is a negative seasonal month. VIX typically rises beginning in August, or maybe even late July. And so it's not a time for complacency. You need to be alert. S&P made a new 2023 high last week, again around 45.80. A little higher, and above there's resistance at 46.50. There's support down at 44.40, and then the more major support at 43.30. So the S&P chart remains bullish, and because of that, we're retaining a core bullish position. But some of the other indicators are getting very overbought. For example, the equity-only put-call ratios continue to decline. They're at very low levels on their charts, which means they're very overbought. But as long as they're declining, that's not yet a sell signal. Breadth backed off a little bit at the end of last week, but the breadth oscillators are still on buy signals, and they're also in slightly overbought territory. Beyond that, the new highs on the New York Stock Exchange continue to do well, and so that indicator is positive. And we also we see VIX continue to hover down around 13. So that's okay for stocks too, as long as VIX doesn't start to rise higher. If VIX does start to rise by at least 3 points, then I would say it's time to take some defensive action. The construct of volatility derivatives is positive, meaning the term structure of this VIX futures slopes upward. So all those things are still positive, but we're watching very carefully here because of the overbought conditions. So I invite you to visit our website where you can keep up to date on all of these indicators on a daily basis. And meanwhile, have a great week trading.